What is going on, investors? My name's Emmanuel, and in this video I'm going to share with you guys some of my recent acquisitions. I mean, the market, right? The market has been on fire post tax day, and it's becoming increasingly difficult to find great deals right now. It's becoming very, very tricky, and this is fundamentally the main reason why I love red days, because great companies go on sale. So from the period of mid-February up until tax day, I was buying, I was loading the boat, I was making my Discord aware of every single acquisition. However, since post-tax day, we've seen a lot of the companies that were hit hard recover quite sharply. So it has been a bit tricky, but I did record a video a couple of days ago telling you guys the top 4 companies that are on my list. And preceding that video, I have made some recent purchases. So let's just dive straight into it, okay? So my very first purchase that I've made recently was Sonos. Ticker symbol is SONO. And I told my Discord here that I started a brand new long-term position at $33.24 after they reported another record-breaking quarter, and it's fast approaching the 120 MA, as we learned from Musashi in the live video lesson. So with my Discord, we tend to do exclusive live video lessons for Discord members only, and for that particular video lesson we covered the power of the moving averages. So in that particular video lesson, we're talking about the importance of entries, okay, and we use the 120 MA and the 200 MA to determine when you can enter a company that you really love the fundamentals and the financials of. So if we take a look at the charts, now this is the charts for Sonos, and as you can see, the blue line represents the 120-day moving average. Now, Sonos has been on my radar since it was in the high 40s. So around that point, it was trading at its all-time highs. Using the 120 MA, I was patient and had it on my watch list and tracked it until recently it came into contact with the 120 MA, and that was my buying signal. So as you can see here, the yellow line represents my entry position, and as you can see, it pretty much bounced off the 120 MA and is now currently on its upward trajectory. Now, the 120 MA is not the only indicator that I use to determine my entries, and within those video lessons we've spoken about the main ones that we use. So if you want access to that video lesson, you need to join my Discord group, and you can do so by clicking the Patreon link in the description below. Now, that's the technicals aside. Let's take a look at the financials. Okay, so second quarter was insane. Okay, it was pretty much a record quarter for this company, and let's take a look at some of their financial highlights. So GAAP net income saw an increase to $17.2 million, and that's from a net loss of $52.3 million last year. Crazy. GAAP diluted earnings per share, or EPS, increased to 12 cents per share from a net loss of 48 cents just last year. Absolutely phenomenal growth. Adjusted EBITDA also saw an increase to $48.5 million. Again, coming off a loss from last year of $28.4 million. And the adjusted EBITDA margin saw an increase to 14.6%, which again was up from last year, which was negative 16.2%. Okay. Gross margins is absolutely insane. That increased by 810 basis points to 49.8%. And from last year, it was only 41.7%. Okay. Revenue increased 90% year over year to $332.9 million. Investors, this is a company that is growing at an alarming rate. Okay, this company is growing exponentially, and the CEO Patrick Spence made this comment, which I just fell in love with. He said, "We are thrilled to report another record quarter at Sonos as demand for our products continues to exceed even our heightened expectations." That is music to my ears. The power of our model is that customers can start with one product and expand to more over time. So they have an ecosystem of products. I broke this down in one of my recent videos speaking about this company and why I think their ecosystem of products is very, very sticky. Okay, so the power of our model is that customers can start with one product and expand to more over time, and our customers continue to prove that they do just that. Okay, once you've got one Sonos speakers, you want to probably get the home entertainment system, and now that they're moving into cars, you can sync it all together. It's an absolutely impressive business model, and this is a company that still has a huge runway of growth ahead of it. Okay, so based on our outstanding second quarter performance, the continued strong demand for our products, and the power and profitability of our unique business model, we are raising our outlook for fiscal 2021 again, okay? But based on our recent performance, Patrick Spence has decided to raise their guidance for 2021 again because the demand that they are seeing is way above the expectations that they had going into 2021. And this is an investment that I'm very excited about, okay? So if you look at Simply Wall Street, okay, so they have their discounted cash flow models. They believe, according to their calculations, that this company is still 44.8% undervalued at its current price of $37, and they believe that the fair value is at $67. Okay, so that represents a significant upside for Sonos. I'm really happy with this investment. The only disappointment that I have is I've not been able to buy more because, as you can see here on my alert, I said here that I only have 15% of my entire budget in play. So I'll be happy to see further pullbacks and add heavier on cheaper prices, but I'm happy for a startup position here. But unfortunately, as you can see, the share price has bounced off the 120 MA and it's continued higher. So I'm not sure whether the opportunity might present itself for me to buy even more cheaper. So it's just a matter of just watching what the share price does, watching what the company does, and I might have to average up. But as of right now, my average price is $33.25. Now moving on to my second acquisition, and this is HIMS. Okay, ticker symbol is HIMS. So I alerted my Discord on Monday that I started a brand new position in HIMS at $12.11 with an initial 100 shares. Okay, my maximum budget for this stock is £7,500. So this is just a starter position. Hoping to see a pullback to $11-ish, and I will load up on some more. Please see Emmanuel's research for some of my DD regarding this stock, including some of the risks, and I tagged everyone. Now, it was quite funny because after I picked up 100 shares, I realized how small of a position that was. So I made an update. I said, update, I just picked up another 100 more shares. Didn't realize my 100 shares was less than 1K. Total share counts is 200 shares, okay? And at that point, the share price actually did get cheaper. So my cost basis now is $11.97 for HIMS. So for this particular investment, I decided to use the Fibonacci retracement tool. And as you can see here, on Monday, we did see a pullback to the 78.6% level. And this was my entry around here. But remember, I did pick up a bit more. So the share price did pull back a little bit on the intraday charts. And then we saw share price take off, and we've had 3 solid days since then. So that has worked out pretty well. However, the 61.8% level is looking like it's a strong level of resistance. So fingers crossed we can see the share price get rejected at this level and pull back to the 78.6% level, at which point I will load up even more shares. But if it continues going higher, then I'm going to be quite upset, quite frankly, because I do want a lot more shares in this business. And again, we did do a private video lesson from all of my Discord members on how to efficiently use the Fibonacci retracement tool and extension tool. And like I've mentioned before, it's exclusively for my Discord members. So if you do want access to that, you need to join my Discord group. And again, the Patreon link is in the description below. But I love this company long term, and let's take a quick look at some of their highlights. So taking a look at the income statement for HIMS, okay, and the top line has been growing at a steady double-digit rate. I mean, it's pretty much been growing every single quarter from June 2019. We've seen growth every single quarter, and this quarter is no different. Okay, the gross profits as well has also been steadily improving quarter after quarter after quarter. However, they did report a severe net loss this quarter, and that's one of the reasons why I believe we saw such a harsh sell-off. As you can see here, they reported a net loss of $51.4 million this quarter. When you look at the previous quarter, they only reported a net loss of $5.2 million. So of course, if you're looking at this from purely a surface level, this doesn't look good. But if you take a look into the numbers, the reason why this company reported a net loss of $51.4 million in the first quarter was down to a one-time stock-based compensation, and they were a SPAC that merged with Oaktree Acquisition Corp. So of course, with the merger came additional expenses, and that affected the bottom line. So now we have these expenses out of the way. I think in the next quarter, we're going to see a massive jump in terms of net loss. We might actually report a net income, because if you subtract all of the expenses from the acquisition and from the one-time stock-based compensation, we did report a net loss, but it was very, very minimal, okay? So that's very exciting times for this business. And I do believe this company is just at the beginning stages of their exponential growth. So those are my two latest long-term acquisitions. If you made any recent purchases, please comment below. Let me know what you've been up to. Remember, I'm not a financial advisor, so please view this content as purely educational and not investment advice. Thank you so much for watching. If you gained any value, please make sure you smash the like button. And if you're new, hit the subscribe button and the notification bell to stay up to date with all of my latest videos. With that said, thank you so much. I appreciate your time and I'll catch you in the next one. Peace.